Let's begin. We're going to call the Indian River Shores Department of Public Safety Pension Board of Trustees quarterly meeting to order.
Okay, we'll start off with the roll call. Albert Iovino.
Present.
Joe D'Agostino. Present. William Gomez.
Present.
Tom Vandeventer.
Present.
And Fred Gardner.
Present.
We have a quorum. I could go ahead and keep us moving here.
Sure.
Public comments? Do we have any public comments this time? Okay, seeing none. We'll move straight on into trustee term update. Most of you don't know this, but Kyle Smith was up for, has expired his term. So in doing that, we put it out to all membership to see if anybody is interested in running against him. Somebody nominated Will Gomez. So we had a runoff between Kyle and Will got the most votes. So Kyle, being that he's expired, he is now no longer on the board, and Will Gomez is going to take over the new term, which began when Kyle's ended in March. So he'll go March until the next term ends. So at this point, with that, we lost our chairman. So the next, we'll move straight in. By the way, everybody, Will, congratulations. Happy to have you on the board. So with that, we'll go ahead and move right into election of officers. We no longer have a chairman, so we have to elect a chairman. And then if that removes a secretary, then we have to elect a new secretary. So at this point, the process is that anybody can make a nomination for chairman. If we get a nomination a second and an all in favor, then we will go ahead and that'll be the chairman, and we'll move on to the secretary.
I'll start with a nomination for Albert Iovino for chair.
Okay, so a nomination for Albert as chairman.
I'll second that.
Okay, so I've got Will Gomez as the first. And then I have Tom Vandeventer. Any other discussion? All in favor?
Aye.
Aye.
Opposed? Okay, so motion passes. The new chairman is going to be Albert Iovino. And right now, we would go ahead and take nominations for secretary. If anybody has one.
I'll nominate William Gomez for secretary.
I'll second that.
Okay, perfect. So we've got any other discussion? All in favor?
Aye.
Any opposed? Okay, great. So we have William as our secretary and Albert as our chairman. If you want to keep going, or if you want me to run it, I don't mind.
No, I'll go ahead.
Okay.
So move for item number 4, approval of minutes from January 27th, 2026. Do you have a motion to approve the agenda?
I'll make that a motion.
Yes. Joe?
I'll second.
Okay, 2.
All in favor?
Aye.
Aye. It's unanimous.
So that was to approve the minutes?
Yes. That was the approval minutes, yes.
Yes.
Okay, so we're moving right down to old business. Nothing on there.
And then we're going to move to item number 6, the reports from the attorney and the consultants. First is from Foster & Foster, Doug Lozen, the actuary. Mr. Lozen?
Okay. Assume I'm being picked up pretty well by this. This is a follow-up, go back in time, to assumption changes we recommended from an experience study last year. And there was a deferral of action. The board didn't make any decision on the recommended assumption changes from our experience study. As a reminder, we go through these experience studies about every 5 years, sort of as a true-up. Every 5 years, we collect all the data from the town regarding salary increases, mortality, retirement, turnover, everything that's happened in reality, and compare that to what we were assuming from the prior experience study. So this is about the 3rd time we've gone through that exercise. And so I went over the results, and the board deferred for a number of reasons, either because of busy agendas or me not having time to get back to a meeting to follow up. We're here today, and what I'm advising is when you approved the last valuation report, the last meeting, the only thing adopted of those assumption changes was mortality. And that's because that's a statutory requirement. We had to do that. But I wanted to incorporate the other changes, but we hadn't made a decision yet. So I'm here today to follow up on that, and I'll give you the cliff notes, high level. I did not reprint the study, but I'll give you the gist. The remaining assumption changes have to do with salary increases, retirement rates, and turnover. Again, the recommendations we made were based on what's actually happened with the plan over the last 5 to 10 years. The impact is fairly minimal. If you adopted all 3 of the recommendations, assumed higher salary increases, and then a revised assumptions for retirement and turnover, it would impact the funding requirements of about 0.15% of payroll. So in comparison, the town's putting in over, I think, 20% of payroll or so. So it's a very minor change, but it is something we recommend as the actuary because it's a standard practice that about every 5 years we review reality and make recommended assumptions. And I do know that auditors do like to see that you periodically do these kind of exercises. So that's my recommendation. I'm here back to answer questions and gauge the board's interest in incorporating these changes with the next report.
Well, just for clarity, I want to make sure I got that statistic right. You said that it was going to be approximately a 0.1%?
0.15% of payroll.
0.15, thank you.
Approximately, by all in, salary, turnover, retirement combined.
Thank you.
So there's 2 ways we can run this. I could make a motion, second it, and then have a discussion, or Mr. Lozen, I wasn't here for the last meeting, and obviously Mr. Gomez wasn't here. If you can maybe recap what the percentage, so you said 0.15%?
Of payroll, so incorporating with the next valuation, let's say the baseline for the town would be 20% of payroll. The revised assumptions that I'm recommending would approximately make the town's requirement 20.15% of payroll.
Doug, would this be a motion for them to incorporate all 3?
Yeah, I don't think there's any reason to individually, you can adopt all 3 assumption changes. Again, salary, retirement, turnover. Those are the only remaining recommended from that experience study. And typically boards adopt them as a package.
If there are no further questions, I would propose to make a motion that we approve that. Second.
Okay, Tom and Fred, got it.
Is there any further discussion?
Seems like a minimal change, especially if it's expected that these changes be made every so often as recommended. So for a very minimal change if we're covering the bases.
Okay, we have a second motion. All in favor?
Aye.
Aye. Opposed? Okay.
Perfect. Thank you, guys.
Appreciate it, thanks. I know you guys always have busy agendas, so just glad to get back here, and I appreciate your time with it.
And Doug, did you want to go over the cyber support?
Yeah, there's one more item on the agenda for the actuary.
Page 6 starts it
Yeah.
on the tablet.
On the agenda, it's cyber security letter. I'll just give you kind of a heads up. I'm thinking the board probably will want to defer action today, just from my experience in the last week. We just sent out these letters in the last week or so, and I've been presenting, and there's a number of attorney questions that I think need to be resolved. But I'll give you the gist of the letter. We've recently partnered with a company called Fox Point Solutions. Their bread and butter, their expertise is working for fiduciaries of pension plans and advising on how cyber secure the individual vendors are for those pension plans. And so they go through an exercise of submitting a survey with about 12 different metrics to all the different vendors for the purpose of establishing, hey, are vendor A, B, and so on, are you cyber secure? Do you have practices in place that would avoid you having to make a claim on your cyber insurance? That's the gist of what that company does. If the board approves, then this pension board, then we would inform Foxpoint, and then they would submit surveys to each of the vendors of this pension plan to fill out that survey, and then you would get a report back. And for ease, it's color-coded, red, green, yellow.
I think I got the example on page 10.
Yeah, there's a sample
Page
letter
10.
that I won't cover here in this meeting. You can look at your leisure. But it's a sample of what the report would look like. So if there's all greens, then that vendor would have passed largely, probably all of the questions in the 12 metrics, the 12 parameters. And clearly if there's yellows or reds, then some of them didn't pass. And clearly with the reds, maybe there's some serious security flaws, at least in the opinion of Foxpoint. At that point, then the board meets with Foxpoint for a presentation, and then you can make a decision. Ultimately, it's not only your decision whether you want to go through this exercise, but then if you want to require of any of the vendors certain remedies that Foxpoint might recommend. So that's the gist of the proposal. It's fairly new, coming out of our firm, partnering with Foxpoint. But at this point, I'll turn it over to, probably before the board asks questions, turn it over to Bonnie. I think that'll be the most efficient way, and then we can do some Q&A.
Yeah, so I think we had some questions about, just kind of the value of the process. If you're answering questions, and you're not necessarily having somebody come in and take a look at each of the systems, although that has its own issues, right? How valuable this would be to the Board of Trustees. I think this is something you could request of each of the vendors to say, hey, tell us about your security systems. I think, one of the downsides to our system of finding out this information is that this is a public meeting, and, anybody can be in here. It becomes a public record. And so, it's difficult to communicate that process. There is some exceptions to public records for those kinds of things. So you might be able to get that information, but I think, we just had a lot of questions about what actual work you would be buying in this particular case. And I guess a lot of questions come to our mind is because, we fill out limited partnership agreements, and we answer all the questions to the best of our ability, as honest as we can. And sometimes we answer the question wrong because the way the question is asked, we know the answer, right? But we don't know whether we're supposed to check yes or no. And so, the data coming in is only going to be as good as the understanding of the people that are completing the documentation, because there's not going to be any backwards check of the information that's available. I think this does raise, some very good questions about, what we should be doing to make sure that your member data is protected where it resides. You've got, essentially 5 people, maybe more, who have access to your data, right? You have the attorney's office, you have the actuary's office, you have the administrator's office, you have the investment consultant's office, you have the custodian who keeps all of your assets and makes your benefit payments. So those are all the places kind of that they would be reaching out to. The standards are probably different at each of those places about, how they keep the data safe for you all. And, while the investment consultant might not have any personal identifiable information, they do have your financial information, right? They don't actually move any money. So, the level to which they are secure is different than the level to which the custodian or the administrator, who has all of the personal identifiable information, all of the financial information, is probably a little bit different. It certainly has, said that maybe we should ask these questions of more than just the administrator and the consultant, which has kind of been when we're doing an RFP, we ask for information about, what's your business continuity plan? How are you making sure that the data is secure? And, we get a 100,000-foot look at what types of things they're doing. I think, Doug is correct that it's something we should follow up on. It's something we should follow with our vendors, and whether you retain Fox Point or someone else to do that process, is a decision probably for a later time. Yes.
Investment managers will also have access to the plan data, or
They
at least
have,
for their components.
they have the financial account numbers.
But we have, when we're registered via a custodian, and we contract with an external investment management, Fidelity, let's say, is our plan just an account number, or is it it's actually the title as our.
So it depends on whether or not you have a separate account or a mutual fund, right? So
Right.
for our equities, we're all mutual funds, so we're just going straight through to the custodian. They have the omnibus account there, then hold the mutual fund. Now for Manning and a peer, right, they have a separate account that are managed in fixed income portfolio at your custodian. So they'll have that account number.
So the omnibus account of the custodian is not there's not a named entity within that. It's just it's the custodians.
Yeah, I mean, we can double check that, but I believe
Yeah.
that's the case.
Okay.
Yes.
Just pointing out that would be six entities, right? It's one of my
Yes,
first thoughts is
six.
who are the entities that are involved here?
You're absolutely correct.
Right.
I should have listed the investment managers, but
Okay.
I kind of put them in a separate category because they don't really produce anything
Right.
for you individually, right? They trade.
No, but
the trade-
they're likely targets.
They
That's where
are
the money is.
potentially targets. You're correct.
One other question, what is the responsibility of the trustees of this board within the town's framework, with regard to assuring, that we are, within these new guidelines by, and the practice of other public entities, which is a question I had, like who are public entities that are,
So you are a public entity.
Yeah.
You're
but we're a small public entity.
You are.
Okay.
You are. But, you are considered an officer for purposes of the state of Florida. The work that you do is public money you're taking care of. So you fall under the guidelines of the Sunshine Law. All of your information is public records. So, you have very, very limited opportunities to speak outside of the sunshine. And that's really only in litigation, or as I mentioned, there is some limited ability to have a security discussion. You, however, don't have an enterprise. You're basically made up of those 6 groups who do the work for you, and you don't have your own system. You don't have data that you manage. You contract with an administrative manager to manage that information. And so when I first read this, I thought, well, this is really for an enterprise. It's really for that board to take a look at what they are doing, what they're trying to protect. Someone who has their own pension office, bigger pension plans. I think the city of Tampa has its own pension office. Palm Bay has its own pension office. The board employs people. You don't have that kind of a setup here. I think the biggest risk for you all is because none of you can yourself direct a purchase or a sale. You can't tell the custodian, move money to this other investment. So you have that level of protection. So I think your biggest exposure and why we suggest that you buy cyber insurance was in the event that one of those 6 providers is breached, and you have to, within 30 days, notify all of the participants of the pension plan of the exposure, give them the opportunity to get with a credit reporting bureau and take whatever actions they need to take to protect themselves. And then additionally, to have someone through the insurance help you to figure out where the breach occurred and how to prevent it in the future. So you have that insurance to help you with that process. We've seen limited places where signatures were stolen through an email and used to move money. And as far as I know, it only happened at one entity. So again, I think your exposures are limited because you don't have a CEO, right? You don't have employees who make decisions for you. You have companies who would be responsible for those particular breaches. So I think that's your biggest responsibility, is to make sure that you have some way to protect yourself and to get assistance in the event that there is a breach.
Right. So in that sense, it seems like this would be more germane to our vendors and how we're vetting our vendors.
I think it is directed exactly to the vendors because they would need to answer the questions about what they're doing to protect their data, your data at their space.
So do you have an opinion on what we should do with this now?
I think we should find out some more information. Okay. I mean, I'm not saying close the door. I think it is a good discussion point. I think it's something we should follow. I don't understand enough about what it is that Fox Point does to know whether it's going to be useful to you as a board of trustees. I know that sometimes I log out of my computer at night and I log back on in the morning and things are different because there's been some kind of update that comes in. Well, how do we know that new update at every space has all of the loopholes closed, right? So is once a year enough? Do you ask, your vendors to provide you with information from actually their third-party IT companies or their internal IT company that they have met these standards from the Department of Labor? I just don't know enough again about Fox Point to give you an opinion about whether it's valuable to you all. But I do think the concept and talking about cybersecurity and what you need to do to make sure that your vendors are protecting your information is valuable.
So, okay. Last question. Sorry, everybody.
No.
But so, Doug, just if you could frame again, so this is something that your firm is recommending, or you're just saying this is a new service? Because I hear, or maybe I'm misinterpreting, but I'm hearing two different approaches here.
Why them?
We became aware of this recently, Fox Point, and this kind of program, because we recently acquired another actuarial firm in the Taft Hartley space, and they were doing this. they, with the Department of Labor guidance, recommended that to the trustees for the Taft-Hartley plans. Now, we understand Taft-Hartley is not the same as public sector pension, but we like the idea because we know that we have to go through SOC 2 compliance every year. We've gone through that exam. We also have a lot of cyber insurance for all of our clients, multiple millions of dollars. And so we became aware of this company, Foxpoint, that well, we might have some suggestions in order to avoid vendors having to tap into insurance. So we like our CEO liked the idea and asked if we would present it to our clients, our individual pension boards, to see if they were interested.
So the function of Foxpoint is purely to qualify these different vendors. Does Foxpoint already have a list of vendors and in their scale, their color-coded scale, or do they only submit that list to us for consideration if we were to retain their services?
I don't know. This is very new. I've only been presenting this for the last week or so, so I'm learning on the fly with feedback from attorneys and boards and questions like you just brought up.
Understood. And by any chance, just kind of to dovetail off that, would they be opposed, if they're going to present us with this itemized list of what vendor offers what and how it measures up to their standards, would we then be able to have our own internal technologies cross-reference that and verify how it links with our system, or would you be able to shed light on that?
I think logically that makes sense, but I'm thinking that kind of question would be something that when you have a presentation by Foxpoint, if you go through this,
Okay,
you could pose that kind of a question along with others.
perfect, thank you.
We do standardly request in the contract that vendors have cyber liability insurance at their space as well.
And so we do have cyber liability insurance
Yes, and that's one of our
With each
agendas.
vendor.
with
Today
each,
is to update.
with
It's on
each
the agenda
vendor
for renewal
or
today.
umbrella over everything?
You have your own.
Right,
and
that's what
then-
I'm wondering.
And then we have I think, $5 million policy. I think Foster & Foster has a $2 million policy.
So I just wonder what our premium is currently. What would happen to our premium if we were to retain this group?
So just so you know, so that is at the bottom of our agenda is renewal of your cyber and fiduciary liability policy. The last board that we presented this to had a great question. If we do retain this company, Foxpoint, is there a chance we get a discount on our cyber
Exactly.
and fiduciary? So that question is being pitched right now. Trust is one of the companies that does the cyber and I think fiduciary as well. So we are reaching out to see if that is a possibility, but that was a good question that that board brought up. So they're two separate things. The cyber liability is the liability part of it. This is the catch things before you need the cyber liability.
Right,
Okay.
and so I'm just wondering
Just
if
wanted to make sure that it was-
the insurance company that's in that business, whether they see value in it, enough value to give us a discount.
So that's what we just now,
Okay.
from a meeting last week.
That's what I was getting at.
Yep, I just sent it to the analyst, and she's gonna reach out to the person she binds the coverage with, and ask if that is, something. So I did send them some material like is on here, so that they can have an idea of who Foxpoint is, and they can start doing their own research.
Right.
Because just us telling them this is what we're doing,
And it'd be
they're gonna have to
interesting
do
to,
their own research on that.
it'd be interesting to know whether the
Right.
cyber insurance, liability insurance company would say, well, for Foxpoint, we'll give you a 2% discount,
Right,
but if you
and
use
that's-
somebody else, we'll
That's a
give
very
you.
reasonable number. I don't think it's gonna be a dramatic
Yeah.
reduction. These are small numbers. Your number today is $1,400 for cyber, 2% of 1,400, you know what I mean? It's not a big number, but I
Right.
do think that it was a good question and one that we're gonna ask just to see. So I could definitely report back to you on how that, is going up the next meeting.
And then we'd also need to know what Foxpoint,
Point,
what they would be charging
yes.
for comparison. Yeah.
I think this, obviously, you said needs a presentation and more discussion, because I'd like to find out who this group is. Are there competitors? I mean, we're insured, the funds are insured. Are we over-insuring ourselves by doing this? Is it anything that can work in conjunction with a lot of the cybersecurity and things that we're doing with the town or not? I think, Will, you're talking about that? Or is it absolutely not? It's completely separate? I'd like to know more about it before committing to anything too, so. you want to make a motion to table this to the next meeting?
Yep.
I'll make a motion to table it till the next meeting.
I'll second.
All in favor? Well, let me ask, any further discussion? No? Okay, all in favor?
Aye.
Aye.
Motion passes.
Okay, thank you.
Okay, we're, item number 2, under the reports of attorneys, consultants, Mariner Institutional. Brad, what do you have for us?
Afternoon, everyone. We have our March 31st quarterly report, halfway through our fiscal year. And it was a negative quarter. Things were pretty stable up until the end of February. And then March was very, very weak given Iran and what's going on over there. So if you flip to page 3 of the quarterly report, you can see what happened in the quarter for the various stock and bond indices. On the upper right-hand side there, in blue, are the domestic equity. You can see S&P 500 was down 4.3%. We've talked about in this past, we benefited from not having international for the last decade, but the last year it's worked against us, as international equities have done meaningfully better than U.S. equities. And you can see that in the 1 year in the bottom right, but for the quarter you can see in orange international equities down about 1%, so less than going down less than what domestic equities did. And then bonds were about flat, a little bit negative, given kind of particularly in March, some interest rates, the interest rates going up in light of the kind of inflation expectations. So, I mean, that's the big wild card right now, what's going to happen there. Subsequently to this month has been incredible, as we had the ceasefire and the market's very, very optimistic. The S&P 500 is up through yesterday over about 9% month to date. International stocks up 10%. Small cap stocks up 11% this month. So we basically recovered everything that we lost and then some. And I'll give you some updates in terms of the market values, et cetera. But the big impact, obviously, oil prices have spiked up. You can see at prices at the pump, right? We went from before I don't know if war is the right term, but we were at least in Orlando around $3, and now it's about $4. So we had about a 33% jump in gas prices. You saw a barrel of oil go from what we got as low as $55 a barrel to over $110 a barrel. We're hovering around 100 right now, and that started to bleed into inflation numbers. You saw a big jump up in March, where inflation was for January and February 2.4% year over year, and it bumped up to 3.3% in March. I think right now, taking the geopolitical concerns and just the near-term volatility associated with that war, the big thing coming into here is what would the Federal Reserve do this year, and the market was pricing in a couple more rate cuts, and given the rise in inflation, that's kind of off the table right now. I don't see anything happening. There was obviously a big issue with the new chairman being approved or appointed from Congress and the Senate, but it seems like I think Senator Tillis came out and said that he's going to not block that anymore because the investigation of Chairman Powell's is done in terms of his malfeasance on that new building. So it looks like he's going to get approved. But it's going to be hard to see while we're in a war in the Middle East and you have oil prices where they're at of any further rate cuts at this time. So in terms of the S&P 500, the company performance, fantastic quarter. 85% of the S&P 500 beat expectations that have reported last quarter, so it continues to be strong. Unemployment continues to be low, a little bit higher than it was at a low point, but still at 4.3% national unemployment, very, very low. But yeah, that wild card, is, how fast can the hostilities end and we can get back to normal and get the Strait of Hormuz back, I guess, open for business. That's the big wild card about what's going to happen for the global economy, I think. Flip the page, get to the plan results, flip to page 14. So this just shows you side by side of December 31st versus March 31st. So we went from 21.4 to $20 million. We did have some cash outflows. So the number that I have for you, given the recovery here is through yesterday, we're at back up to $20.8 million. That includes, last week we had to raise about $300,000 to fund some lump sums that went out of the pension as well. So I have a rough estimate of a little over 5% month-to-date return for the pension, so we'll get into the performance later. Page 17 shows you the asset allocation. So we're within policy limits for all asset classes. You can see we were a little overweight domestic equity, which worked against us last quarter. We're also a little bit overweight fixed income. The big underweight is to real estate, where we're at 6 versus a 10%, which again worked against us a little bit last quarter, given the kind of positive returns for real estate relative to the S&P 500. I did want to point out to this, we've talked about this in the past, but we haven't gone through this chart all that much. On page 19, so this shows you our asset allocation relative to the median pension in that investment metrics, all public fund. So you can see, nothing for us in global ex-US, that's international stocks. The average pension has about 15% of that. On the whole, we're not terribly overweight equities relative to other pensions, but we do have a bet towards US versus international. Although we don't have alternatives or private equity like we talked about last week either. So I just wanted to point that out in terms of kind of where the drivers of performance this quarter were. The average pension has 15% in international, which was only down 1. We have that in domestic equity, which was down 4. So we're going to look a little bit worse than that. But we should bounce back this quarter, hypothetically. We'll see where it comes in. Page 20 shows you all of the activity that happened in the quarter. So you can see on net transfers, 2 things. One, per our discussion and your approval, we terminated the MFS Growth Active Fund and put that money. We couldn't get access to the Vanguard Mutual Fund because of the minimum. I don't know if you guys remember that. We were going to do either the mutual fund or the ETF, depending upon what we could get into. But we weren't able to meet the $5 million minimum for the mutual fund, so we put it into the ETF. So you can see that in there. And then also we had last quarter, we also had a pretty big lump sum distribution that we needed, so we had to raise about $470,000, which we took out of the S&P 500 index fund. We had just shy of $97,000 come into the pension from members in the town, and then you can see that big outflow of benefits paid of $847,000. Management fees were just over $6,500, other expenses of $36,000, and then you can see the dividends and income of about $79,500, the capital loss of almost $700,000 in the period. And what that looks like from the performance perspective is on page 22. So we were down about 3% last quarter. That puts our fiscal year to date at 331 at negative 1.3 net of fees. But like I said, I'm looking at something around a 5% return this month, so we're at least positive fiscal year to date. You see our equities, domestic equities were down about 4.8. I think that's to do a little bit of the kind of the weightings between value and growth. You can see the value index was up 2%. And then while we don't have a full quarter because we did it mid-quarter, you could see the Russell 1000 growth was down 10% in the quarter. So it was a quarter where value stocks did relatively decent relative to the growth stocks. That's kind of the opposite this quarter, which you see, and the market goes up, growth stocks are up about 12% this quarter, and value stocks are up about 6%. Page 23 shows you the fixed income, managing to appear slight positive at about 0.1%, a little bit of outperformance versus the Bloomberg Aggregate Bond Index. But the floating rate funds combined down a little bit at negative 0.2%. We did see kind of in this downturn, risk aversion, you saw spreads widen a bit. Those are, levered loan corporate bond fund, below investment grade. So they were, the PGIM did a little bit better than the Aristotle, but on the whole, that was down a little bit. And then page 24 shows you the real estate. And we got about 1% there out of our real estate managers. Both were up about 1%. The story there has been the same it has been the last couple quarters. After that 2-year bear market where values went down about 20-25%. For the last year or so, probably now, maybe going on 6 quarters, we've basically been flat from a capital appreciation perspective and kind of clipping the REC coupon that is roughly around 1% per quarter. Hasn't been any really change there. Still, we've had the 10-year rise a bit, which works against real estate. It's not dramatic. We went from, I think, December 31st, the 10-year Treasury was at 4.15, and we're at about 20 basis points higher now. So it's not dramatic, but still, I think in order to get kind of that next leg up for capital appreciation in real estate, I think you need to see the longer-term rates come down a bit. But so tough quarter, but I think with this recovery, we should be looking better this quarter at least, and positive fiscal year to date.
These are calendar or calendar quarter.
Say again?
Calendar, right? These are calendar basis quarters.
So this
Right.
report is as of March 31st.
Right.
Yeah. So the numbers when I said, that I ran yesterday are unofficial. I
Yep.
pulled the numbers from the custodial website, and then kind of add back the cash that we paid out in lump sum last week to kind of give you that
Yep.
estimate of positive 5% returns. But that is, to be clear, an estimate.
Can you just briefly, just to educate everyone, bring me up to date on our floating rate strategy and what's comprised in those levered loans?
What was it?
What's the composition of those leverage loan portfolios?
I'd have to dig into that and get back to you on that.
They seem to have the best 3-year return of all alternatives, so the annualized return. So
Yeah. So we had good timing there, right? So we put that into the portfolio to remind the board. We were, basically, it was a way to lower our total fixed income portfolio duration back in 2022 when rates were starting to go up.
Mm-hmm.
So we took 5% out of our core bonds and put it into that. Because floating rate basically doesn't have any duration exposure, right? You're taking credit risk, but not interest rate risk, because they reset every quarter the interest rate based upon what's going on in SOFR. And it was a good move back then.
Yep.
As we've had basically 3 years straight. If you think about 2022. Maybe the last couple months there was like spreads widened a bit, but starting in September of 2022, the market just went off, and you had spreads just tighten for the last 3 years, which has benefited those securities, as no one's been really worried about credit risk. Now, we're in a little bit of different, you have a war going on, you have a lot of rhetoric about direct lending and private debt that's going on out there. That you're starting to hear, you're not seeing it a lot in the data, right? Defaults aren't really moving that much. You've seen a couple high-profile ones, but on the aggregate, you haven't seen a whole lot of increase in bankruptcies and in loan defaults at this point. But there's a lot of I wouldn't say newspaper ink, but I'm dating myself, right? There's a lot of headlines out there on, you know, the coming storm in private debt and what's going to happen there. There's a lot of private debt funds that invested heavily in software companies, and if you follow the markets, software companies, you know, valuations have got tanked over the last couple of months as everyone thinks AI is going to basically eat software. But to get into the nitty-gritty of what they hold, Tom, I need to get back to you. I don't know all the exposures off the top of my head.
Well, the peer group is the peer index is bank loans. These are bank loans.
That's correct.
Right.
Yeah.
Right.
Yeah, that's what
But
11.
we're not seeing, I mean, actually, in all
This isn't private credit, so this
Right.
isn't, these are, you know,
Right.
there's a, you know, these are mutual funds.
Liquidatable at an NAV.
Right, so they're, you know,
Right.
one day, it's not like we're locked into these, we can get rid of them whenever we want.
Oh, actually, if you listen to all the bank reports in the last 2 weeks, I mean, credit is like, you know, squeaky clean. Even
Right, so you
American
have that.
Express call, I was on that call, I mean, squeaky clean, like better credit than they've had, you know, since, you know, 2019.
Yeah, and.
So we're not seeing any erosion,
Yeah.
you know, of,
And,
in
yeah, I
those.
was actually reading the Capital One Discover one, and who has a lot of exposure
Yeah.
to like, you know, unlike like Wells Fargo and JP Morgan, right? That's like direct
It's not the American
consumer.
Express customer.
Yeah, exactly,
Right.
they're reporting very, very clean numbers and not
Yeah.
taking a whole lot of loans. So there's a disconnect between a lot of I think the headlines, and then what's, you know, what at least what they're reporting thus far in terms of loss reserves and things of that nature.
Right. Yeah, just, I mean, anecdotally, because I sit on your side of the table sometimes this week. I mean, I was doing a lot of, you know, calls this week with, you know, boards, and, you know, if you actually take through this past Friday, you know, the whole international outperformance on a trailing 12-month basis is completely eroded in the last, like, you know, 6 weeks. The S&P 500 and growth stocks have, you know, far outperformed, you know, the Euro Stoxx 50. And the other key thing that's happened in the last week, we went through a major rotation where value stocks, basically kind of the bloom came off the rose because people got, you know, were afraid of capital spending and AI. It's happening today, you know, so it vacillates, you know, day to day, hour to hour, what have you. Tomorrow, we have 3 big companies reporting. But, you know, I think that rotation basically lasted from the end of October through March 31st, and now it's completely swung back the other way. And I don't think, you know, that we should be making our investment decisions based on, you know, a quarter or, you know, one or 2 quarters of trend. So I think, and just to that point, something I never really spent time looking at, Brad, is on page, let me get to the right spot here. Page 31 in the handout. Maybe, you know, if we look at our, you know, we had a legacy of being completely, you know, a value manager in terms of our equity allocation. And, you know, when we look at page 31 now, upper right-hand corner, rolling 3 years, which to me, I've always believed like rolling 3 and rolling 5s are the best way to evaluate, you know, returns for portfolios. That I think that looks pretty good to me, you know, because it looks like we're up in the, you know, first and second quartile on a
so we went
gross
from
basis.
well below
Yeah.
average, you
Yeah.
know, you're right, for a long time up until,
Yeah.
when was it, 2021, 2022, we had, you know, a very conservative posture of only having managing the peer, managing a value portfolio as well as the bonds, and then we kind of diversified and you know, we stumbled a little bit because we picked a couple bad managers, but I think, you know, the move to put 80% into the S&P 500 index fund a few years ago is a prudent one, and yeah, it kind of speaks to, that's a good.
Right. The other big factor has been the dollar, you know, since the tariff policies this past April. Tariff tantrum or Liberation Day, whatever you want to call it. You know, the dollar, I guess on the euro is basically devalued probably almost 15%, you know, 12 to 15% versus like the euro. And so that, you know, automatically, if you were invested in euro stocks, in the, you know, euro currency, you would have seen, you know, a gain on that just on the exchange rate. So, you know, we don't know if that devaluation of the dollar will continue. So.
Right.
Anyway, I think that's. I mean, I think
I
guess the question would be like, would we want to put money? It seems to me like allocate to international now, and I guess my view would be no. At this point, I wouldn't conclude that. Yeah.
Yeah, if you know, I think we have the best businesses in the world, right? Not that there's some good internet, but on the whole, I think structurally, I think you know, the question as a board is, are you okay with the bet relative to other pensions, right? It's worked out for the decade, but this year has been bad, right? We would have been much better off. You know, I think, you know, there's a lot of variables that you're talking about that I have zero ability to predict what's going to happen with the dollar, and that's a big driver of the relative performance for a U.S. investor in international stocks. And while they're still cheaper statistically than the S&P 500 in terms of the PE multiple, right? It's certainly not as cheap as it was 18 months ago before you had this 40% rise in international stocks either. So,
I always said cheaper for a reason.
Right.
They don't have the productivity and the managerial science that we do, you know, here in our country. I mean, our cash, our receipts and disbursements category, that's our cash.
correct.
Okay, and is that what is that, what is the yield, what is that invested in?
I'd have to look it up, but it's somewhere in the high threes right now. It's in a Goldman Sachs money market mutual fund.
Okay. So it's not in a like a BDP, a bank deposit, or what is it, BDP?
Yeah.
Can you
I can pull it up right.
Yeah, can you confirm that?
I know what the ticker is.
Right. So that's in like is it a government?
Exactly. Yeah, it's a treasury obligations
Okay.
fund. It's very, very conservative.
Okay.
It's not in. Like you know, there's different flavors of money market, right? You could go into something that has all repos and CDs, etc. I always recommend it to the board when Sound Trust asks us, just go into you might give up a couple basis points of return, but in a 2008 scenario, you feel good that you're not going to break the buck, unlike some of the money markets at that time.
So our allocation out of real estate, which I'm looking at a net transfer out of principal. That's on page 21. That basically went into cash, but then it got kind of like.
That 3.3%.
Right, okay, good, great. It's almost as bad as Northern Trust. The worst. The transfer out of, to make sure I'm reading that, on a fiscal basis, on page 21, the transfer out of principal of $426,000.
So a few quarters ago, if you remember, we decided to put an additional redemption in for both managers, and principal basically paid it off right. And I told you guys it might take a few quarters. Well, principal had enough liquidity; they paid it all off right away. Intercontinental still is not in that mode, as you can see the difference there. But so that just we got it wired to the R&D account. We used that to pay benefits.
That's kind of where I was going with that. Because we had, if I recall correctly, we had kind of kicked that can down the road and said, as a board, that we were going to reconsider, real estate investments at some point. But now that allocation has been depleted by transfers, basically. Disbursements.
Yeah, I mean, we can always put money to work there, but in terms of like the plumbing.
I mean, it wouldn't be coming out of cash now.
Yeah, you can see we've had to pay $1.1 million out in benefits on the fiscal year-to-date benefits, because we had some big.
We knew that was
came
coming,
in.
so we decided just to let it sit.
Yeah, we had
is my
two,
recollection.
Shaw, Benham, and Villers vacate. Those were.
Yeah, so we just had a couple
those were
last
big.
week. We had a big one in the first quarter as well, where we had to pay out a big one. So yeah, so that all just went out. And,
Okay.
Again, so right now, if we wanted to reallocate from another area into real estate, we have that flexibility. It's not a screaming buy to me right now in terms of what I'm hearing from our research and talking to the real estate managers. So I'm not going to recommend that to you, but we have that ability whenever, but we would just need to take it from equities or fixed income. We could have a little bit of cash right now, but I mean, we're pretty much in line with where we typically are, about 1% to 2%.
As my fellow trustee here said, so the leverage loan investments that we have, those are in daily redeemable funds.
Yeah, so they're 40 Act mutual funds.
So we can be
yes.
tactical with those if we wanted to.
Yeah. And that's why, a few quarters ago, it was early, but, we took that down from 5% to 2.5% as spreads came back in, right? We were getting SOFR plus 6% back in 2022, and it's come down to SOFR plus 3 or 4. But so we have that ability. We can get rid of it, or we can add to it at any time. And it's not like a private fund where, if we were to make an investment in a private debt fund, it might take 2 years to get invested. That's not the case with these.
But even as a floater, since the Fed hasn't cut rates, it's sustaining a fairly high rate because the short rates are still sticky.
Yeah, right. Any other questions?
So just a quick observation, if you might make it. So on page 19, where you show pension fund allocations, it's pretty heavy duty for alternatives combined with private equity, isn't it?
Yeah, I will note we have the population, right? So you'll note for alternatives, there's approximately a little over 400 funds that have reported so far. 200 have alternatives, so 7% is of the 200, not of the 400. Does that make sense? So of the funds that report alternatives, they have around on average 7%.
Oh, gotcha.
Half of the sample size don't have alternatives.
Yeah,
Does that
gotcha.
make sense?
Yeah, that makes a little
Are
sense.
those equal weighted or dollar weighted based on the size of the plans? You don't know.
So these will be market value weighted, and these are all self-reported from, we put your data into a database, and other consultants do that as well. So it's going to be based
So
on.
if you have multi-billion-dollar plans in there, they're getting dollar weighted in terms of the construction of those medians. And
That's right.
okay, yeah. So it could be very biased. So you have no idea how to interpret that.
Yeah, I get what you're saying. Yeah. So this would be this sample would count CalPERS equally to Indian River Shores.
Oh, it would count
It
equally?
would now, yeah. So it's
Oh,
not.
okay.
Yeah.
So it's not dollar weighted.
Yeah, it's just if there's 400 pension funds, it's you're 1 and they're 2.
Okay.
Yeah.
Okay,
Okay, well, that's more meaningful.
yeah,
Yeah.
yeah, exactly.
Okay.
Well, any questions? I appreciate your time. Thank you.
Thank you.
Okay, we go to item number 3, Bonnie?
Yeah, so another in the line of things that 3 years ago we probably wouldn't have talked to you about. So there is a regulation from the Department of Justice on making sure that your material that you place out on the web is ADA compliant, and people who are not sighted or people who cannot hear are able to access it to the same extent that everybody else can.
It's page 35.
The regulations were to go into effect for cities that have populations of more than 50,000 last Friday, and for cities that have less than 50,000 population next year at the same time. They've just extended both, like last Monday, April 20th. They extended it 1 year for each of those categories. So we have some time to really consider this. I think the important takeaway for your pension board is that as we enter into new contracts or amend contracts, we want to add provisions to the contracts for our service providers to say, you need to make your documents web compliant, even if it costs money to do that. You all don't have a web page yourself, but there are some documents that the town has to put on their web page. And so to the extent that they don't have a vendor that can convert these documents into something that's ADA compliant, I'm guessing they would ask us to make those documents ADA compliant. So there's 5 documents that you have to put out there, one of which is the actuarial evaluation. There's another document that's kind of like an actuarial evaluation that you have to prepare for the state. The 112-664 report is what you see on the cover page. There is a 1-page summary that you have to provide a link, and I think that's ADA compliant because it's at the state level that you link to. There is another document that you have to produce that's a comparison between your actuarial assumed rate of return and your actual rate of return. That's generally just a 1-pager that you get from your investment consultant. And then the last one is your actual expenses, which can come from either the city's the town's consolidated annual financial report. It can come from the administrator. There are various places that you can get it, and I think it's actually in the actuarial evaluation. So that data all has to be web compliant. So I think that's, again, the biggest place that you all will have that needs to come into compliance. The web page that's available for you through your administrator is behind a password. There's members who go into it are the only people who can see that material. You don't have a public-facing web page. So this will be something that we talk about. So I'm assuming that Indian River Shores will be in compliance in 2028, which is the under 50,000 population. I'm sorry, we can't hear you.
I apologize. I was just clarifying the date to him, and it's my understanding that most websites, at least when you create new websites, that they automatically have that function built in. I'll have to look more into it myself, but if it's just are we talking about transcription or for the auditorily disabled?
There are certain things that need to be done.
Mm-hmm.
I can tell you that I have taken a class, and like I know about this much of it because a lot of it had to do with coding and computers. And then when I went to school, computers were just becoming the thing. So we didn't get a lot of coding. But there are certain codes, and I think that software is becoming better at making things compliant initially. You can go through a process with the Microsoft Office and the Adobe, but it's not necessarily the be-all and end-all because there can be some things that are not compliant.
Correct.
So we just need to make sure, and charts and graphs are really hard, right? We don't have a lot of pictures in our world, We don't have a lot of sound that we provide to participants, but we are really heavy on the charts and graphs.
Understood.
And so that's really hard to make sighted, people who are not sighted understand what we're trying to do.
Absolutely. Oh, okay. I'll confer with a friend of mine. He is a programmer. I have some mild programming knowledge, but I'll confirm with him just to see what his thoughts on it are, and then I'll.
I know that early on, this is probably 3 or 4 years ago, Foster & Foster had a vendor who would do their evaluations, and I think it was like $1,500 per evaluation, if I'm remembering correctly.
Is that to make each document compliant, you mean, or?
$1,500 for the entire book, so
Understood.
45 pages or so to make it compliant. I have talked to some actuaries now who are talking about bringing that in-house because the software has become so much better.
Yep.
But their vendor was charging them net now, like $8 a page to get that done.
Okay.
So I think that the technology will meet with our requirements at some point, but we also want to make sure that if you don't have to go out and get a vendor to convert it, that you would pay for it through your service providers.
Absolutely. Understood. Thank you.
The memo that we have online says April 26, 2027. It's 2028?
So it is now 2028.
Okay.
And that happened last Monday.
Great. So you put that, you add that in the minutes. And then, Bonnie, can you, if you're going to handle this for us, will you give us an estimate as far as what it's going to cost for you to do it?
I'm not going to add it to everybody's contract. Just as they come up for renewal,
Okay.
we'll add it into people's contracts.
Okay, thank you.
The next memo is just about your financial reporting. Just a reminder that you have to file online by July 1st. Your financial disclosure information your first reporting requirement is now. You have 30 days from your beginning to serve on the Board of Trustees. And then that will fulfill your requirement for this year. But next year, by July 1st, you'll have to file it. Again, you have the opportunity to pull up what you filed in previous years and just make changes to that. You don't have to recreate the document from the beginning.
And I think the city already got you set up with the Department of Ethics, so you should be able to go on and log in. I'll confirm, but I'm pretty sure when you came on the.
We're all due this year, though?
Everybody has
Yeah,
to
okay,
file
by July
every
1st, right?
1st.
And it's electronic, right?
It is electronic, right. You have to go online. So I can't help you with getting online.
No,
If you
I
have
did it last
questions-
year. Yeah, I just couldn't remember if I did it paper first and then did it electronically or not.
First year you were here probably was paper, and last year was electronic.
Okay, thank you.
I'll confer with you on that.
What's the site you go on?
So the electronic financial disclosure management system.
Yeah.
Have my memo.
Okay,
Yep.
yeah.
There's a
EFDMS, gotcha.
Yeah, if not, if you want, just send me an email, I'll send you the link.
Should we expect a prompt from the
No.
state anyway, or no?
They may send you an email.
Was not thinking about this at all.
No, they don't.
used to send letters.
I think last year I got one.
I think they send out emails, but I can't be sure. I'm not. a
If you want, I'll just send everybody the link.
If you could, that'd be
I'll
great,
just send
Troy.
everybody the
You
link.
get a notice,
Yeah.
you know? No? Okay.
Yeah, I'll send everybody the link. This way, everybody has it, and you just click right on it and send it right to the Department of Ethics.
July 1 deadline?
July
Yeah.
deadline.
I'll probably send it to you next week.
Thank you.
Yep.
Fines don't begin to accrue until September 1st, but.
Just one question on that, Bonnie. Do they have to file Form 1 or Form 6?
Form 1, they file Form 1s.
Okay.
Has that lawsuit been resolved?
I'm sorry?
There was a lawsuit over filing.
Yes.
It's been
Right.
resolved?
We filed Form 6 1 year.
The next item is share plan distribution review. So we had some confusion about the distributions that we made to the most recent retirees. And so we kind of wanted to just have a discussion about what the ordinance says and ultimately our conclusion about it. So the share plans essentially are available for distribution to those people who are members in the plan on September 30th. So you get a distribution and you get an allocation of the earnings of the pension plan based on what the plan has earned. And you get a pro rata share of that earnings.
I'm sorry, I couldn't hear you. You get a what?
You get a pro rata share
Thank you.
of the earnings, and it's allocated on September 30th. So it takes, we get the report about 6 weeks when you all accept it, about 6 weeks after the end of the quarter. And then the document or the calculations are done to determine what the balances are. So you're looking at 8 weeks
Yeah, give or take.
to get the distribution. So at that point, people who leave after September 30th, who don't leave on September 30th, can, their distribution should be available within 8 weeks after the end of the fiscal year. So that's how it will be done in the future. Everybody's balance as of the prior September 30th will be paid to them. Administratively, if they leave between September 30th and 8 weeks later, it won't be until after the 8 weeks, but everybody else should be able to be paid their balance at that time because there won't be any earnings after September 30th.
Yeah, it's just a timing issue. Somebody leaves on October 2nd. We have to wait to go through the whole valuation process, probably a couple months later, at which time the share plan gets updated. And then, so they might start getting antsy. It's like, I left in October, and it might be December or January. But those who leave, say, in, like March, April, very quickly, we'll be able to get them their prior September 30th balance because it's already been done. So it's just a timing issue, but it's such a small plan. Unless you've got members leaving right in that October through December time period, there won't be any waiting. It'll just be an administrative, we'll get them set up for their first check from the defined benefit, and then their share plan will happen at the same time.
Did you go over the holdback issue or no?
No, we don't need to do a holdback
So we're not
here.
gonna, okay.
Yeah.
They would just get their balance as of September 30th.
Okay.
And there's no earnings after that period
Okay.
until the next allocation and earnings distribution.
Right. Okay.
And then the drop plan, you all had decided to do the quarterly allocations of earnings, and so members would be able to, again, we have to get the balance or the report of the earnings. It takes about 6 weeks from the end to, for you to get the information, and then another 4 weeks or so to get the calculations from the actuary. But, people would be able to get them on a quarterly basis.
Then you all remember that, you decided that at the last meeting, the policy where the drop updates would be quarterly, so Bonnie just mentioned. Yeah.
And neither was I.
Up until the last meeting, the drop updates were being done annually. And so, of course, members in the drop plan, that's a long time to wait. So they made request of the pension board, hey, can we get them more frequently? And so the board approved quarterly updates. Mariner gets us the quarterly returns, typically about 6 weeks after the end of a quarter, and then we'll update. And that's how we handle 99% of drop plans in the state quarterly.
So is it safe to say that the issues with some of the other members that have recently left, and again, this is just third-party information, so withholding 10% for up to a year, et cetera, that's all been resolved?
Yes, because they don't get any earnings after the end of the quarter.
Okay.
And that scenario is very standard with most plans, is to hold back that 20%. But with this plan, it wasn't being done historically, so we're not going to do that.
So we're going to put a communique out via Mr. Gomez to the members that you're going to get your quarterly drop statements. You're going to get your drop, excuse me, I misspoke. You're going to get your drop statements quarterly, And then once a year, as we've been doing, we get the,
Share balance.
right, the share plan distribution.
Yes.
Plus or minus 10 weeks.
Well, yeah.
Now, as far as the timing on drops, just, you're taking notes, right? But roughly mid-May, mid-August, mid-November, mid-February. Just give or take. That way, because I know they're getting antsy if the market goes up 10%, like, hey, and if it's down 10%, they're like, hey, everybody wants their drop right away. So May, August, November, February,
Mid.
give or
Okay.
take, should be the expectation.
Okay.
So I also wanted to let you know that we have the new special tax notice which came out, which is the IRS safe harbor notice. So in the end of 2022, there were some substantial changes that were made to exceptions from the early retirement to rollovers for public safety officers that we wanted to get out right away. This special tax notice, which has all the IRS language in it, came out the beginning of this year, so 3 years. We have waited to get this information. In the meantime, we made some changes to the special tax notice to let our members know some of the changes that were there, but we put in lawyer language like, be sure to check with your tax advisor, but these were the changes that were made to the Internal Revenue Code. We have the new IRS recommended language, and if we follow this language, we're deemed compliant. So we have updated that document for distribution to your members. So this is something that we give to members when they get a refund of contributions. This is what we give them if they take a share account distribution, if they take a drop distribution. This is the document that they get in order that they know exactly, how they will be treated in that process. So that's just for your information. It's actually a good document if you have specific questions about how to manage withdrawals. It works really well. And that's all I have for you, unless you have questions.
I did just add on their legislative update. I didn't know if anything new had come down at all, if there's nothing to report at all.
On the,
Okay. Okay.
So nothing on the legislative update?
no, I think they're delaying the property tax stuff till the next special session.
A couple of sighs. Rightfully so. Okay, and any other discussion on these reports, gentlemen? All right, we'll move on to Troy, your review of the cybersecurity policy and the fiduciary liability policy.
Sure. So we do this, I think your policies are each year. So the cybersecurity policy estimate came in at the same as last year. So that is the actual liability part of it, that if something does happen, that cyber liability insurance would kick in. So if there's no questions about that, I'd ask for a motion to bind the coverage at the same rate as last year.
Nothing's changed in the policy, coverage-wise or otherwise. I'll make a motion to renew the cybersecurity policy.
Second motion.
All in favor? Aye.
Okay. In the same scenario, your fiduciary policy also came in, I think it was $15 more than last year. So it's $4,091.51. I think last year was like $4,069 or something. It's nominal considering.
I'll make a motion to renew that fiduciary liability policy as well.
And I'll second that.
All in favor?
Aye.
Any opposed? Passes. We have the update on the state annual report.
Yep, so we prepare the annual state report for you every year, and we send it to the state, which we have done. It has been sent, and then usually in mid-August is when we hear back how much money you're getting back from the state. So just wanted to report that that has been filed, and the first meeting after the August time when it comes out, I'll report back to you what the amount is. Let's see, so that's that. And then moving straight down to educational opportunities, there's two coming up, FPBT Annual Conference, June 28th through July 1st. It's coming up, that's already opened. If you're interested in going to that conference, I would get with me immediately, send me an email. I'm going to send you, our analysts have been nice enough to create a flyer with a, what's the scan thing that you do?
QRC code.
That thing, your QR
The
code.
QR code, I'm sorry.
So basically, the analyst is the one that signs you up for the class, and it sends you the confirmation, and then you book your own hotel, pay for that yourself, track your hotel cost, your mileage, and your food. And then, but from that QR code, there's some questions that have to be answered before we register you. So if you want, I will, when I send you the link to the ethics department, I'm going to also send you that attachment too. So that all you got to do is do it with your phone. You can send it directly to the analyst, and she'll know to sign you up. Okay. So that one is the most popular one. That's the summer big conference. I would recommend, if you want to go to that within 15 to 20 days, I would get that in, because that hotel will book. So you can still possibly get in, but you'll be at a hotel down the road. Instead of walking out of your room and falling downstairs, you'll have to get an Uber or something. So I recommend that you do this sooner than later. The second one is going to be, I just put this on even though it's way out, just for planning purposes for you. It's going to be the Trustee School, September 27th through the 30th. That's also in Orlando. So, and I'll send out that QR code for that one as well as we get closer. Other than that, that's all I have for my report.
Okay, last item, well, almost last item, the consent agenda. I'm going to make a motion for approval of 1, 2, and 3, unless anybody has any, or we can have a discussion after an approval on it. So make a motion to approve the consent agenda items 1, 2, and 3.
Seconded.
Was that Will? Sorry. Okay.
Seconded.
Any discussion on it? I'm just going to want to make a comment that I realize that the invoices seem a little higher based on the activity of people leaving and phone calls and other things that occurred, right?
Probably, I mean, that's.
Okay.
It will, just so you know, in general, so when we group all three of those items in together as the consent agenda, we just get one vote instead of doing for each one. The fund activity report at the very end, that's going to be on page, just so that you know what you're looking at. That is anybody who's left the plan, whether it's a retirement, a drop exit, if you're not vested and you get a refund. So all of that is listed on there. It's just our running tab of what's coming out of the plan. So we had two big ones that left, which is why Brad has to now scramble to, to pay for those. So when you have a share balance and a drop balance times 2, so you've got 4 lump sums coming out at one time, which is why he has to then scramble to move money. Okay. So, and Will, if you have any question about anything today, feel free to, call me. We'll go over it. Okay. All right, so I have a motion, a second. We got this all approved.
All in favor?
First.
Aye. Opposed?
Perfect.
Okay, approve the consent agenda. Trustee reports, discussion, and action.
So Will, this is the time when, because of the sunshine law, you guys cannot discuss anything that's supposed to be discussed here amongst yourselves outside of this meeting. This we put at the end. If there's something that came up during the meeting that you thought about that you want to discuss with the board, this is the time to do it. But outside of a meeting, other than a meeting time or a date, there should not be any discussion about anything that's going to go on that requires, to be put in the sunshine and the light. Okay, so that's the way that goes. I know it's tempting, but you really need to not talk about anything that should be talked about here, okay, or that's scheduled to be talked about here. Okay, so about that.
Do you have our administrative balance? Is that in here, or what are the balance that we use to pay these warrants and other services that we're getting?
The balance? I don't know what you mean by balance.
Isn't there a line item like what we have money set aside to pay?
We don't set aside the money, but you do create an administrative budget.
Yeah. Do we have a balance, or
I don't keep a balance.
Okay.
I don't do that.
So we just set
All I do is
we just
set a
set
budget.
the budget for the year, and then at the end of the year, we get a total of what we spent?
Right,
Okay.
yeah,
I believe
Now-
there's always margin added
yes.
because it's an exercise the state requires. And there's a hassle if you go over because then you have to redo it and send it before council, so there's always margin. But other than that, it's just an exercise.
Okay.
The budget is the budget.
Now, I do check it before, usually I'll check it before meetings just to make sure nothing looks egregious, so there's nothing at this point that overall, we're nowhere near, getting.
Okay.
So even if we get close on a line item or we go over one line item, as long as we don't go over in the total, that's what our biggest
Okay.
concern.
And if you want an estimate of that,
The budget, he can send you the budget. He can send you what you.
I have it from before, I just was curious if this is, or something
If you
that
want
was
an
just more
estimate
updated
of
with,
that,
with
Alex?
some of the, things that we're looking at and fees that were, like, we weren't expecting to have a consult for the cybersecurity stuff and things like that, that's all.
on page 20 and 21 of the quarterly report, under the other expenses column, that basically is all of that. So if you, while it's not line item, that gives you a sense for what the fiscal year to date amount spent on all of your service providers.
Okay, versus what we budgeted for?
Right.
Okay, all right, that's what I was asking. I appreciate it, thank you. Anybody, any other discussions? Any other business? No? Okay. Next meeting is set for Tuesday, July 28th, 2026 at 2 PM. Everybody good with that? All right. And we are adjourned.
Beautiful.